Welcome to Locking Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning and welcome to the Locking Your Success Options Trading for Income Weekly Update for September 21st, 2015. If you're watching this on YouTube or some other venue or listening on a podcast, please come on over to our website, join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And the website address is lockeinyoursuccess.com. That's Locke with L-O-C-K-E, inyoursuccess.com. Also, while you're there, check out our trading programs. We have the super simple spread trades, the M3, the Bearish Butterfly, the Rock, the M21, and APM squared. In case this is your first time watching, we are covering 4 real-time hypothetical trades that are traded in accordance with the guidelines as presented in their respective online trading courses. And then we're answering some questions. And we're doing this for the purpose of helping you become successful as market neutral traders. So really great thing that we like to be doing here. The 4 trades we will be covering are the Bearish Butterfly, the M3, the Rock, and from the SSS trading program we have the V Condor. If you'd like to watch a live trade, I do cover the live trade that I'm trading for the SMB Trading Options Desk Monday morning after this webinar at, let's see, at 10 o'clock. It's a live $1.25 million M3 style trade. If you'd like to see that, then here is the link to go ahead and get on that. I'll show you how to get to it via our website a little bit later. But you have to be an Options Tribe member, and you could go up and sign right there. Also, remember that this is Results Week. Not only will I be showing you the results from our September trades, but it's also time to get your results in for the Lockup Hawaii 2016 Challenge, and also it's time to submit a trading plan and your results for a Successful Trader of the Month challenge that we're having. Now, with this here, you don't have to have a complex trading plan. You can tell me you're doing an M3 if you're just following standard M3 guidelines or a Bearish Butterfly or whatever. If you have modified guidelines or you're trading something else, then you just submit whatever plan that you're trading and describe it as well as you can. And the results are not necessarily based off of who makes the most money, but who has the best plan, who's following their plan the best. What we're trying to do here is we're trying to encourage people to be great traders. And in order to do that, you really should have a nice detailed outline plan, and you should be following that plan. And the results are what the results are. This is the real reason we're doing this. We're trying to encourage you guys to do the right things in order to be successful month after month in trading. And this is one way that I saw to do that. And we can have a little fun doing it. So come on in and do that. Also, we have some new and exciting news. One of the things that people have been asking for, they've been asking for more affordable support. They've been asking for some sort of a forum and maybe some special content for members of that forum. So Sherry and I have been talking. We've put some of the other projects that we were working on, we put them aside for now, and we decided to just go ahead and provide some support for people, because we want to make sure that we're getting you as quickly as possible to being profitable as a trader. So we're starting something called Locke Options Community, which is going to be a community forum with members-only content and information with a basic design, members helping members, and it allows me to put out some more detailed content that we don't necessarily want to always put out to the general public. And also, we're going to have some discounts for people who are members for one-on-one coaching, and possibly for some of the programs we have. And we'll probably rotate stuff on a regular basis, but lots of good stuff there. The next thing that we're going to start doing is what we call community coaching, which is going to be kind of like a group coaching thing. Again, and the idea of getting affordable support for newer and more experienced traders, maybe that are trading with a smaller account and can't, or have challenges paying for the fees of a one-on-one coaching type of thing. So we're thinking of, and this is stuff that is fluid. So it's under development, and we're working on exactly how to set it up. But we are planning on launching this or getting this started in October next month. So all the details aren't together completely, but we are getting those together for you, and we have a basic framework set up. But we're planning on having 2 one-hour coaching sessions per month, questions and detailed answers. We're going to go over live and hypothetical trades, some students trades, mainly to be. This is going to be different than the old SMB group coaching. This is going to be student-driven and a lot more content and real-life stuff. I believe that Dave's going to be with me on a lot of the sessions, and maybe he'll be teaching some of the sessions, and we'll be able to get some back and forth. You'll be able to get different opinions from different people, so it'll be really, really great. For the most current information on that, you can visit our website at this link here, and I will show you how to get there. So let me just quickly do that. Before I do, though, I think I have a question. Is there already a German Locke community in place? I don't know what a German Locke community is, Jens. Will the meetings be recorded and archived for viewing? Yeah, we're looking at what we're going to be doing for the meetings and archives, and we're trying to put something together fair. The setup we had for SMB, where everybody has access to all the past meetings, was not fair to people doing that. But yeah, we'll have some sort of a I'm sorry, I'm reading comments and I'm laughing. We'll have some sort of a venue, so we'll do the meetings live, and we'll record them and have them available for a certain amount of time for members. So. All right, so Locke community in the German language. Oh yeah, that would be great if we could do that, except I can't speak German, so it's going to be challenging for me. Maybe we can speak to Tom over at Capital Discussions. He's over in Germany. Maybe he has some ideas with that. Thanks for the comment. All right, so anyway, if you want to access some of this stuff, we can come over to my website here, just so that you know where it is, for the Locke options. If you go to lockeinyoursuccess.com and under coaching, we're going to have Locke Options Community Coaching, and you can just click on that link. That's going to give you a page and going to bring you to the most up-to-date information we're going to be having on the community. And like I said, this is, we're developing this right now, so some things might change around, but the basic framework and idea is going to be the same. So you can come over here if you want more information on this, then you just click here to register for more information, and we're going to have some special pricing discounts when we start, things like that. But that's that. Also, if we are interested in your Lockup Hawaii Challenge, they're under freebies and more. You can get information there. Information for Successful Options Trader of the Month is also under the same tab. And also, if you want to go to the Options Tribe and join Options Tribe to watch this large trade I'm doing, you can access that directly from our site now. We're just forwarding you over into SMB so that you can get there more easily, because I know sometimes things are challenging to find over there. So that is what we have going on. So lots of neat stuff coming out, and like I said, I'm really excited to help you guys out. All right, so let's move on. I just have a question. I'm looking at your programs and see the prices. I'm wondering how long your programs last. Is that as far as how big they are? Why don't you email me personally and with a more specifically what you're looking for, as for how long they last, and we'll do that, and we'll go from there. Okay, let's take a look at what's going on in the marketplace right now. So last week, my thoughts were that the Russell was probably going to come to 1200, 1210 area, but not last week. I didn't expect that last week. Last week I was expecting the market to come maybe to 1170, roll over a little bit, kind of like it is now, and then push up into the 1200 area before it rolled back down again. So unfortunately, that's not how it happened. We just kind of launched right up to 1200, and then we reversed off that level. So it's not that much of a surprise that we reversed off 1200. It was a surprise for me. I didn't think it would go there that quickly. So, that being the case, we are still in our short-term uptrend channel from our crash. Not surprising where it looks like in the futures we're going to get a bounce this morning. I do not think that bounce is going to hold. I think the market is likely to trade lower, probably down to 1140 area before it actually settles into some sort of a sideways range probably for next week. So I don't think we're going to get any range breaks this week. I think we're probably going to stay under 1200 to the upside, probably over 1140 to the downside. If you're looking at the shorter term charts, we do have some shorter term support in the 1140s. So more likely we're just going to push sideways. I don't think there's any big news events out this week. So those are my thoughts on the market going forward. The Russell's trading technically, from a technical standpoint, from a charting standpoint, fairly normally. Some of the other ones are a little bit messy. The SPX, if we like the NDX. Actually, the NDX is trading okay too. Let's see if this data loads. Looks like I'm having charting problems again this morning. So let's move on then. So let's push to our trades. We'll see how the September trades are doing, or how they did. Last week on Monday, we had our September M3 trade going. It was looking something like this. Was up approximately, by the end of the day Monday, about $3,400, so nice looking position there. We were close to our maximum delta. Had the market cooperated and did what I think it was going to do and push maybe to 1170 and back down, this could have been actually a profit target month this month for this particular trade, but it didn't work out that way. What we ended up doing here is, let's see, on Tuesday, I'm just going to go to 1500 on Tuesday. The market climbed up. We went way over our maximum negative delta here by the end of the day. One of the things when we're looking at a very high volatility environment, and in other words, the volatility levels are relatively high, and you're coming into expiration, and at the same time you're getting a volatility drop, this T+0 line starts to really change a lot from day to day. So and that's kind of what we're experiencing here. That's why we got so much of a delta shift. But anyway, this here was obviously way over negative delta, and it was corrected by just doing some verticals here, 1140, 1160 verticals. And we also did one 1150, 1160 vertical, put us into minus 56 delta outside the tent, which is a decent position here. Again, we still have some nice downside protection if the market decides to wander its way back here. Would have been, again, a fairly good profit target trade. This is pretty much where I thought the market was going to top out personally, but it kept going. If we move forward to Wednesday, we got a continued up move, so I'm just going to go 1500 on Wednesday. Right, again, we are pushing over our maximum delta, but not by a ton at this point. If we take a look at our graph here, we are looking something like this. Now, because of that, all I did is I sold 4 1150, 1160s. If we push forward into this, and now we come to this position here, held that for, and this is the position we're sitting in as of Wednesday, day before Thursday, right? The day before the last trading day before expiration. And typically what I will do is up until this point, we've been doing end of day adjustments. I will do intraday adjustments if I hold something into expiration day, particularly if it's outside the 10. So this is the way we sat there. If we move to Thursday morning, I'm just going to go to 9:30 here. I was hoping maybe we'd get a nice gap down or some sort of a big move down here, but by 10 o'clock it was fairly obvious there wasn't a whole lot that probably wasn't going to happen. Right? You can see we're very negative theta, we're positive vega here, and basically we have 1 day left. So what we did is we did a lockdown, what I call a lockdown, where I sell the 1170. I sell the call. First of all, I sell the call off. This 1070, I sell my 1170s, I buy some 1160s, and I basically rolled these back. So if we take a look at the adjustment here, or where we ended up, I did a condor order to roll everything back to 1140 and 1130, and sold the call. This puts us in a position that essentially looks like this, right? And I can expire this trade. Now, if the market has a horrendous gap down, I might make something. I could try and trade out of it or whatever, but this is what I did. I did that condor order, I sold the call, and I let this expire. And if you'd like to see the T-log for that, that looks like this here. So there you go. Okay. So you can take a look at that as in the recording. So that was the September trade. If we move to Friday and we just kind of hit the profit and loss, it turned out being in the reports about a $3,000 gain from, I think I actually listed it as less than that, but I'll have to go back and check. But it shows us as about a $3,086 gain from that. Let me look at the expiration line, see if that looks correct. Sometimes option view can give us some weird numbers. This should have been a profit of $24.51. I believe I recorded it properly in the results sheet. So that was the September M3 trade. It's a bit of a challenging month. Let's see. In September, why haven't I locked in profits by selling the call and selling a few open wings on Tuesday or Wednesday? Well, I ended up doing it on why. Okay, so basically that's what I did here. I sold the call on Thursday, expiration day, and I rolled the wing back. Right, so I locked in the profits. So I could have done that. Yes, I could have done that on Tuesday or Thursday when the market was up a lot. You certainly could do that if you were trading this on your own. However, if you go back on Tuesday or Thursday, I still had a good chance of pulling profit target or a bigger number. I was in a relatively safe position, so I'm just risking a little bit of profits in order to possibly come out with a full profit target month or a better month. So I just let it go. So that's, I mean, really, that's a choice you have as a trader. There was nothing in the guidelines to tell me. Like I said, we're trading this in accordance with the guidelines within the programs. There's nothing in the guidelines and the programs that tells you to lock your profits in on this specific day or that specific amount. And there's really nothing wrong with this position. This is still a position that could certainly make the money you're looking for. So no reason to lock it in as far as I'm concerned. So hopefully that helps with that question. The September rock trade was similar. We had a M3 type of a trade here going on. Let me go to the rock trade. If you remember, this was actually entered Right, if you remember, this trade was entered right before, at like the worst possible time. It was entered the Wednesday before everything started coming down. It went through the crash and everything, got drawn down almost 10% for a short period of time. And it was having challenges in an M3 type of positioning, actually getting the profits back into the trade to get profitable. Now, I did have some traders who live traded this and pushed into a rock trade faster than what the normal rules tell you to do, and they actually did very good this month. In other words, they came in early in this week and they converted this over to rock position and ended up doing close to 10%. I had a couple in the 5% range. I had some in the 7 or 8% range, so they did fairly well with the rock trades. However, that is not within the guidelines. It's within the guidelines here to stay in an M3 position until you outrun to the upside, or you're having a volatility issue or something like that. And that being the case, this was not converted into a rock trade until very late. Let me just take a look at my things here. We had basically almost the same type of situation here with this trade. The market ground up on Tuesday, and we ended up selling some verticals from the 1130 and 1140 range to bring us up to 8 short and 2 short at 1150 and 1140 respectively. Put us in a position that looks like this. Obviously, we're not going to be making any money here unless the market is very cooperative with us. But like I said, I had a lot of live traders or a lot of students who actually went into a rock trade here this day and did pretty well, but I did not, because like I said, I can't justify it within the guidelines. So I didn't do that. However, on, let's see, Wednesday, we did convert over. So on Wednesday, we basically closed out this position here. We sold out this call, and I'll show you, it's rather than describe every move, I'll just show you where we ended up. We ended up here with what would have been, if I was in a normal position, 10 1150 butterflies and 9 1190 butterflies. However, when I went into that position, we have time value to consider. Realistically, it's not worth buying a long put any lower than 1120 because you don't get enough value for doing that. And it's not worth buying a long put over 1200 because, again, you don't get enough value for doing that. So this would be equivalent to 1150, 1190 rock trade, almost 2/3 entered into a position like this. Had the market done what we thought it was going to do, settled, we could have made something on this particular trade. That did not happen. The market kind of took off. I traded this intraday on Thursday and ended up, I'll show you how we managed it Thursday, that's fine. So Thursday, September rock, 11 a.m. So let's look at this at 10:30. Right, remember Thursday the market shot up pretty high and then it backed off. But realistically, we do have intraday adjustment limits, particularly on expiration day. I'm going to be playing with this. So I ended up coming here on -2. By the time it was 11 o'clock, it was over our -250 delta number. So I added in some butterflies here. Again, they were broken wing butterflies, but I added in extra butterflies there. Of course, I don't have any time value to sell anything over 1190. So as the market went up, I continued to buy the 1190 broken wing butterflies. They were 1140, 1190, 1200s. And I did that right up till the end of the day here, right? Continuing to buy into these. Now at 1430, this posted up $7,000, which I don't think is real. Most of the day it was posting somewhere between plus 1,000 and minus 3,000 most of the day. I could get some really, I think 3,000 was a low number. 7,000 is just out of the ballpark. I mean, there may have been, I don't think that would have been realistic to fill, so I ignored that number. And I went ahead and closed this out at 1530 essentially. Well, partially closed it here and then completely closed it for a loss of, I thought this was a very realistic number. So actually, let me show the T-log since we're here. Right, so we'll go ahead and do that. Lots of moves on this particular trade due to the market movement. But if I go into reports, I close this out at a negative 1744. I think that's a very realistic number in this particular position. I'll explain why I did not add calls. You mean to do call butterflies to the upper butterfly? It doesn't really matter if I do call or put butterflies. I just did it with puts. It's easier to demonstrate that way because it gets kind of messy if I start playing with the calls. So it's mainly for demonstration purposes with that. But that was the September positions. So if we take a look at our September results here, we had an okay month. I mean, it wasn't terrible. We closed the bearish butterfly out fairly early at a reduced profit target. We ended up getting 13.3% on that. Generally, this type of market is not an issue for a bearish butterfly. We had an M3. We closed out at not 5.1%. It was not 5. I have to fix this number. It's not 5.1%. It was lower than that. It was about 2,400, so it would have been about 2.5%. But again, I'll fix that number, but it's closer to about 2.5%. We had a rock trade we lost about 3.5% on. We had a V trade or V condor that we lost about 5.3% on. So we had 2 minus trades, 2 positive trades, ended up being up slightly for the month on the portfolio. So overall, again, everything is still doing fairly well, except for the V trade. It's performing a little bit less than what we would expect, which I know that trade it was performing very well until the market got real choppy in August and September. It doesn't like choppy markets. It'll be fine going forward if the market settles down. And the bearish butterfly is great in this market. M3 usually works well in this market, and rock trade usually works very well too. We just happened to have a bad entry type of date, type of a thing. All right, so that is those particular trades. The Analyze tab at 1430, yes. Let me go back to our Analyze tab at 1430. That's what we look like at 1430 on Analyze. We have a theoretical value here that we should be profitable. Realistically, if I'm live trading this, if I am expiration day and the market's wiggling around and I can get out of this at some sort of a profit, I probably would have done that. But like I said, I think minus 1,700 was a very real number on this. All right, so can I please comment on slippage in different strategies, M3, bearish butterfly, rock, bull versus bear? I put on a V condor last Friday, 25 cents below the mid price, and never got filled. Yeah, so let's see here. Execution is an art in itself. In general, on our bearish butterfly trades, on our M3 trades, and rock trades in general, I can usually beat option view prices. That's not always. Sometimes, and notice I didn't say mid prices. If you watch any of our advanced programs, we go over thoroughly. We talk about execution and how mid prices are basically meaningless and stuff like that. So there's good value pricing, and like I said, you need to learn how to execute. Generally, when I'm doing these trades, bearish butterfly, M3 rock, most of the M21 stuff that I do, I can usually beat out what option view is going to convert me. You get into these long-term things like V condors, where you're way out of the money with an iron condor, or if you're doing a bull vertical, you're usually going to give up some, not all the time. Sometimes things go better, sometimes they go worse, but usually you're going to give up some money on like a V condor or a bull vertical trade. Now, and there's not really much you can do about that because you're just putting on a condor. You can't play with that. You're putting on something that's relatively flat delta, and you just end up giving up some money. With a bull vertical, if you time it a little bit when the market's coming down, you can sometimes beat mid pricing. But a lot of times you're going to give up a little bit in those particular strategies. Bearish butterflies I typically do very, very well because I know how to enter them. M3 trades I typically do pretty well because I know how to enter those as well. So that's hopefully that answers the question with that. Actually, I'm starting to run short on time here, so I'm going to have to limit my questions. But yeah, but like I said, that's basically what we typically experience for execution. Usually we do pretty well. But again, as you're a beginner trader, don't worry about that so much. You're going to experience some variances in mid-pricing. Sometimes you'll do better, sometimes you'll do worse. As you get more experienced, there's a lot of things you can do to do better with execution. All right, let's quickly look at the October trades. So for October, we had a bearish butterfly on, which got, if we go back to Wednesday, that was before we did any adjustments on Wednesday here. We were sitting here at 1130. The market shot up past our 1170, I believe it was on Wednesday here by the end of the day. So I went ahead added our second third at 1150. This is what our position looked like on Wednesday. And this is what we looked like on Friday. Of course, the market pulled back. That was good for us that particular day. And this could very easily, if the market this week, remember we're 21 days to expiration on Friday, so if the market doesn't go any higher than it is now, this could easily be exited at a reduced profit target area by the 21st. Realistically, if I'm sitting back in the middle of the position and I know that tomorrow I'm going to be exiting this anyway because I'm up a certain amount of money, I may exit it a day or two early. But as of right now, this is what we look like here. Looks like we're going to be going up today, but like I said, I think we are coming down later in the week. This will probably be exited sometime this week. If we look at our October M3 trade, this did have an adjustment. So let's go back to that. We'll come back to Monday here, and then I'll answer a couple other questions we have before we exit the trade. So this was at, remember I was able to buy because the volatility was so high, 17 butterflies to one call. This got beat up in the little crash we had, but not too bad, down about 5%. And by the end of the day, let's see, October M3, by Tuesday, we ended up having a delta issue, so I did 12, 11, 10, 11, 20 verticals. Right, so just did some verticals here to flatten out our delta because it was too high outside of our tent. Everything's still fine here. However, on Wednesday, with the continued up move, I ended up selling these butterflies and verticals, and I just moved up to 1130, and I went down to 10 butterflies. That balanced me off fairly nicely and put me back into this position here. So as of right now, this position is still down a little bit, but it's mostly recovered from, at least halfway recovered from its drawdown thus far. And if you push to Friday, there were no further adjustments here. And we ended up in this position here. And if we just put in some fake numbers here for whatever price is missing, we have, I'm down about $500. So this is a nice looking M3 trade. It took a little while to get here because, like I said, we got so beat up from the crash, but it's looking good thus far. So we'll see where that goes the rest of this month. Also, we had a V Condor on that looked like this, which actually had no adjustments. This trade is doing okay, although I would like the market to take off to the upside. But here is what our V Condor looks like. It looks like we might end up settling back into here. We'll have to start taking the V out, but as of right now, everything is just going along normally. No adjustments last week for that trade. And I did do a rock entry on, or a rock trade. We started on Wednesday, and I entered as 1150 butterflies with 5, 1150, 1160 verticals, and we ended up in a position that looks like this by Friday. So that is all the trades that we have on. We are looking at a bearish butterfly entry on Friday, and we also have an M3 entry because we'll be 56 days expiration on Friday. So looking forward to doing those. I did get a question on whether to comment on the entry for a November bearish butterfly. I mean, as of right now, butterflies in general are very inexpensive. So we got some really good opportunity here. So, and I'm perfectly fine with a bearish butterfly. If you pay $9 for a bearish butterfly, you probably have 100 points of range if the market takes off on you, assuming it does it early, which to me means, let's see, I closed my thinkorswim. So, so that being the case, if we have, possibly 100 points upside here, particularly if the market's up today or up later in the week, then there's a good chance we'll be able to make, even if this takes off, we'll probably do okay. So I don't think it's like a fantastic opportunity to enter a bearish butterfly, but I do think that it's got as good a chance of making out well this month as it does any month. It's a decent month for that. Okay. So let me just see what else I have. November bearish butterfly. When I show an ideal risk profile for going into expiration, actually settlement to the next day. I guess I don't exactly know what you're looking for, Lewis, but what I can tell you is this. If you're going into expiration, what you need to plan for, and I always tell people this, we do have a significant value change sometimes between Thursday afternoon's close and the settlement value on the Russell, which could be actually outside the range of the index traded. Now the reality is that this is really no different than any other day. I mean, if I was on Wednesday and I was going to trade into Thursday, and I'm close to expiration, I have a very steep gamma and I have a lot of directional risk coming in Wednesday to the Thursday before expiration. So to me, I don't treat it really any different than any other day. The only exception is I really can't trade on Thursday. But the reality is I can't trade on Friday. But the reality is if I set up my position on Wednesday and I have a gap down of 30 points on Thursday and the market keeps going in the morning, I'm not going to be able to do anything with it either, right? And I'm still at the risk of taking this big loss. So what I do is I say, look, the market, how far does the market move? And it's not unheard of to have the Russell move 30 points from Thursday's close to RLS value on Friday. So that being the case, I'm going to, and the fact that it's pretty easy to do into expiration, I'm going to limit my risk down so that if I take a 30-point move, I don't exceed my absolute maximum loss number. So, I might be up a little bit on the trade, and I might say, well, I'm going to try and get this money because they're not giving it to me. They're making me take the gap risk overnight. In order to give me my money, I might say, well, I'm going to take that risk. But if I'm going to take that risk, I want to make sure that if I go 30 points, I'm not exceeding my maximum loss numbers. So if that scenario does actually happen, I'm not getting absolutely killed or taking 3 months or 4 months or a whole year's worth of profits if the market happens to do that thing. Typically, I'll make sure that my absolute loss, in other words, there's no possible way I can take more than my absolute maximum loss, and a 30-point gap won't exceed my maximum loss, and that will give you a nice range that you probably won't get hurt in. So hopefully that answers that. Another comment. Many thanks for the demonstrations. Thank you, Jens. Thank you. I appreciate that. All right, so let's do. Is it possible to do all 4 strategies in a single portfolio? Yes, it is. It's a pain in the neck. You can go in, if you have thinkorswim or certain brokers, that you can segment your accounts out so that you can look at them differently if you'd like. What was the call strike for the October expiration? I'll quickly hit that on the rock. I did a 1020. And there's the T-log for that. Right, so average close for the settlement in the last 7 years is 5.71. So I'm assuming that is settlement from Thursday to Friday settlement value. That sounds about right. And he says the biggest, this is from Andrew, it says the biggest is 47.73. That is also correct. And one of the things you have to remember, that 47-point move was to the upside, not the downside. So everybody who's trying to cover their downside and doesn't worry about the upside, taking losses on the upside, that 47-point move, which was the largest in history, and there was nothing actually ever in history that even compared to that. That was very unusual, and that was 47 points to the upside. So very interesting to know. Okay, and looks like that's it. Before I go, I am on Options Tribe on Tuesday. So I forgot to mention that earlier, September 22nd at 5 p.m. Eastern Daytime, so make sure you join me there. We're going to be going over playing with the super simple spread trades and how to adapt them to your market opinions. So that'll be a lot of fun there. So hopefully you guys join us. Thank you for the extended session today, and we will talk to you next week.